Okay, we're talking about dividend stocks today. So all of you guys that like doing that boring index fund investing and you just want to buy a mutual fund and hold it for 50 years, this one's not for you. We're talking about the people that still like to find stocks to play. Find stocks that they like, stocks that pay dividends, and today we're going to go over 4 stocks that basically wrote the book on paying dividends. All right, so here's the deal. If you're looking for stocks to invest in that pay a dividend, it's not a lot of them right now, but there's some really good names. What we want to consider is, why is the company paying a dividend? Just because a company pays a high dividend doesn't mean it's something you want to invest in. For example, there's a company called Windstream, not the RV company, it's a different company. And they're paying a 28% dividend. 28% a year to hold on to their stock. Now, their stock's not doing well. They're in pretty severe trouble. I think last time I looked at it, it was around $2.50. So there are companies that pay high dividends to try to attract investors. Come give us your money, help support our stock price, and we'll pay you 28%. I don't even think they have that 28% to pay the people that buy their stocks. So we want to look into, why is the company paying a dividend? We also want to know, how volatile is that dividend? Do they pay 28% for a while, then they pay 2%, then they pay 15%? What's the deal? We want a stable dividend because we're long-term investors. We're not interested in jumping in, grabbing a dividend, and jumping out. That's a game. People play that game, believe it or not. So we want to look for stocks that consistently pay some dividend and it fluctuates very, very little. We also want to take a look at the stock's volatility. There's no sense in investing in a stock that pays a great dividend if all that stock is doing is dropping, like Windstream. We also don't want to have a stock that's whipping around back and forth, and so that sometimes we're really nervous and sometimes we're really scared. We want a slow, stable stock. Okay, so the first company that we're going to talk about today, which is very, very popular for paying a dividend, is Verizon. So you've heard of Verizon, you know what they do. If you don't, I looked up their thing. They just bought Yahoo, by the way. So they own Yahoo Finance, Yahoo Sports. They're creating this new division called Oath Inc. What this is 50 different media and tech brands. You've heard of the Huffington Post, you've heard of Tumblr, AOL, Yahoo, Makers. They're putting them all in one basket, and they're hoping that that will drive growth going into the future. Now, right now, Verizon pays an annual dividend of about 5%. The tech space in general, if you look at the average of the tech space, I went through and looked at all of them, they're paying an average of 1.38%. So you've got the average here, you got Verizon way up here. They're trying to attract investors to stick with them for the long run, and if you do stick with them for the long run, they're going to pay you about 5%. Now, they have a long history of paying this dividend. It's always been in that range. You can go back 5-10 years and watch the dividend just fluctuate ever so slightly. It's a big name, lots of shares trade on that stock, and the volatility of the stock, it's known for being kind of a slow mover. It's one that if you look up day trading videos, you're very rarely, if ever, going to see somebody day trading Verizon. It's not that active. It doesn't move like Apple, Amazon, things like that. It's a very, very slow moving name. So that's pretty good. If you're looking for 5%, you want a long-term investment and a stable name, something that's not going to just scare the devil out of you one day, Verizon may be something you think about. All right, number 2 is a company called Annaleigh Capital Management. Now look, this is a real estate investment trust. Real estate investment trusts tend to pay high dividends. It's how they pay for the returns they get on the real estate. What they do is they go out and they buy like a shopping mall, let's say, and they get, Saks and Verizon stores. They get different companies to come in and rent the space. As they collect the rents, then what they do is they usually pay out to their investors in the form of a dividend. So they usually pay high dividends. Now, don't get sucked into this. You want a real estate investment company that's diversified. And when I look at Annaleigh Capital Management, they're spread out. They do some commercial real estate, some residential, some middle market business, and even some agency mortgage-backed securities. So they're not betting the farm on a mall. They're not betting the farm on like a Target store that they rent out to somebody. They're really spread out all over the place. Now, some real estate investment trusts, or Reits, will pay double digits. They're going to pay out big, big, big dividend, but you want to be very careful there. The annual dividend on Annaleigh is currently 9.63%. The average in the financial space, take all the financial stocks, REITs and banks and everything, put them all together, you average 3.2%. That's not bad either if you're looking in the finance space. But They're paying 9.63%, and they've got a pretty good track record of paying about that much. It does fluctuate a little more than Verizon. So it's a real estate investment trust. Be careful. Don't get excited if you look up these names and you think, oh man, I'm just going to go buy like 10 REITs and get all this dividend. Careful. Don't overcommit there. All right, third, we've got AT&T. Don't really need much explanation there. You know who AT&T is. They have a history of paying a really stable dividend. They're also known for being a pretty boring, low and slow kind of stock, as they would say. They're paying out 5.23% right now. If you look again throughout that space, it's 1.38% from its peers, so you're getting a little bit higher dividend than average. They've got a long history of paying that dividend. They've got a long history, obviously, of being a big, stable company, so AT&T might be one you consider as well. Actually, can I stop for a second? I was looking up here. I found Gamestop. I just wrote this down. Gamestop and Macy's. Those are names you've heard of. This is a great example of companies that you don't want to consider. GameStop's paying 8%, Macy's paying 7%. They're both in a little bit of trouble right now. Well, a good amount of trouble. So they're paying a good dividend. It doesn't mean that you wouldn't invest in them. It just means it's kind of more of like a lottery ticket. You're kind of hoping for the big turnaround story here. And I don't know that it does that. They may do well. Macy's is a big name, of course. They might make their way out of this trouble, but that's why they're paying a high dividend. They don't normally pay these high dividends. Okay, let's just wrap this up. Number 4, IBM. Okay, you know IBM, you've heard the name. If you haven't, then you probably shouldn't be investing because they're a big name as well. In the tech space again, they're paying 4.16%, average 1.38% as we said before. They have a long history of paying a dividend. They're that big stock that just kind of does nothing over time. That dividend comes in handy. It's not the greatest choice for my number 4 pick. If you're willing to do a little research, you could probably find something a little better if you were just trying to find 4 names. So that's pretty much it. That is dividend stocks that we've come to you with. We've done these videos before. If you go back on our YouTube channel, you can see we talked about some other names as well. I'm not saying these are great investments. I'm saying if you're looking for a dividend, there's some things we want to consider. I went over those at the beginning, and don't just dive in because it has a high dividend. If you have questions on dividend stocks or the investments in your retirement portfolio, or you need somebody to help you out with that, that's what we do here. Head on over to our website. Feel free to give us a call. Check out everything we do. We have a very unique investment approach there, and I hope to talk to you soon.